Stock market update, end of week, Friday, June 19th. This is Critical Point Podcast. I'm Rich Posen. It's 7:49 a.m. Central Time. Let's start out with something that was on marketwatch.com. This chart that I'm showing you is in an article, and it has to do with the single greatest predictor of future stock market returns, and it has to do with how much money the middle class or basically households are putting into the stock market. And if it gets too high, it turns out the stock market has a bleak future over the next 10 years. The returns shouldn't be so good. And as people pull out, which normally has something to do with a drop in the stock market, it actually renews with a more positive forecast. Well, the gist of the article was that this recent setback has set a scenario for like 1 to 2, 3% type annualized returns over the next 10 years, whereas late 2019, it was looking for minus returns or hardly any return at all. So it's kind of interesting. It does show that it had a little bit of a long-term timing aspect of warning of tops in 2000 and 2007. So that coincided well. However, it's not an actual timing tool. Okay, it's just something to look out long term. At any rate, I found it interesting this morning because it kind of supports my long-term model point of view that we're probably in a bull market, and if we're not, we will be by the time we get to 2022, and the bull market should last into 2028. Kind of shows there's a setup here, the way people are investing their money, that we can get to some positive returns. And again, though, I think it primarily has to do when we knock the stock market down a significant amount. Now, I'd like to point out, even though there's some fantastic money managers who really blew it this year, missed out on some of the downside, missed out on the upside, just amazing some of the complications and problems investors had, and a lot of discussion that this was just an unprecedented fundamental-driven event and bear market and fantastic recovery. And I must say, I agree with the virus recession as an unprecedented fundamental, but I disagree in that I'm really surprised that following this market intraday, intraweek, and throughout the year, that to me, this has been a very orderly market. The technicals have worked very well. It's like they didn't get too carried away and destroy their own technicals. I think the technical crowd has been running the show, and that the fundamental people really didn't know what to do. But at least the fundamental people didn't come in with gigantic amounts to cause tremendous volatility, I think. And I'm very, very pleased with my model. I mean, and I look at commodities, and it just worked very well in many commodities. It's just saying, the model always says normal includes abnormal. Okay, it's just a wide range of normal that encompasses almost everything. So to be truly abnormal is really bizarre. It's got to be really out of the parameters of normal. And it's just fascinating to watch these fluctuations. Yes, there's been a few things that just didn't work, or a few things the model couldn't catch in a timely manner, but just amazing how well it's worked. All right, I want to show you something here on the S&P 500 cash. This has been on Twitter. A lot of the technical people talking about this, and it's quite possible the fundamental people would look at something like this. This is the S&P 500 cash intraday, and notice a gap up and traded sideways, gap down, and notice this wide space in here. This is called a bearish island reversal. Notice the market has come back, but has since struggled, and I'm really puzzled this week of what's going on. Why didn't they trade more this week? I'm kind of surprised. I mean, yesterday was just a boring, dull day, and here it was Thursday. Come on. I mean, these days they don't seem to really want to trade that much Friday, Monday. So these people are apparently the professionals are only working Tuesday and Thursday these days. Great gig if you can get it, okay? And yet here they take Thursdays off. Well, I think something's going on where they're starting their summer vacations, and we're just not going to get as much business until we get into the fall months. And I think that supports the seasonal and also supports the idea of sell in May and go away. So I think the seasonal suggests you really don't make much money from this time on into October. The better money is made from October into, say, May, June, something like that. Okay, you can look some of those studies up on the internet. Maybe you can come up with something different. So something's really changed here this week. I think they're just preparing for July 4th, and they want out, and they really don't want to do much business. Personally, I think that supports my idea of going lower in July. Okay, I just don't think I think we're losing our buying and demand here. Now, the point is, if this index turns down, takes out this week's low, then it's going to, without totally filling this gap zone, it's going to support that and look quite bearish. And I think that'll support the model outlook for a drop in July, support the model outlook that we probably have seen a top. If not, we're working on a top, okay? Now, what will it do if they actually get it high enough to fill that gap? Well, I think I'm going to view this as like a remnant indicator, just saying it still means something bearish. I mean, why did they get bulled up and immediately turn bearish? And they turned more bearish, I think, than they were bulled up around that gap zone. So, but most people will just simply throw the pattern out, pay no attention to it, and the diehard bulls may actually view it as a bullish indicator. Okay, let's move on to the daily chart here. Now, as far as some of this L4 inter-week stuff, the model's basically saying that we're due for an L4 top today. So I won't be surprised if this turns out to be a negative reversal day. If it takes out the overnight low, or in other words, the current low of today at 3,094.75 for the September S&P 500 futures, I will call that a level 4 top, and I'll assume the bottom is not due to Monday and may even delay into Tuesday. So I think they're probably going to be selling into Monday. Frankly, I just can't tell you, are they going to wait and sell Sunday night, and it may even be late Sunday night. There could be a final pop-up and an alternate forecast on early Sunday night. But I think this should top out, and notice the daily stochastic is approaching overbought. It's nowhere near extreme. It's just getting to overbought. I suppose that's a wide enough spread to suggest lingering upside momentum, but it's not as wide as back in here. It is kind of narrowing. I think it's suggesting we're losing upside momentum and getting closer to a top. Now, starting on Monday is the first day for a top, and it can take all the way through next week to even early the following week. I say it tops out no later than next week. Now, there's also some alternate scenarios here that suggest maybe it could top out today, but that's getting a little fuzzy, all right? That's pretty much suggesting, I think what's really suggesting is maybe the level 3 top next week comes in a little bit lower than the high of this week. And notice how much of a struggle it was. They put it up early in the week, respected this trend line. Now overnight they're putting it up, and as always, the overnight tends to lead the entire cash market. So now we'll have to see whether the cash market really has the courage to reject this overnight up move. You could argue it's going to create a little bit of a gap up today, as it's also trying to fill that bearish gap. Maybe that's a sign it's about over. So I guess what I'm saying is, even though it's supposed to be higher next week and top out and then go lower into the following week, okay, something like this, at the same time, I'm wondering, is it possible the highest price will be seen this week and we're going to get a little bit lower level 3 top and then down, and that would actually be more of a sign of a weakness. If we move over to the NASDAQ September futures, this is the mini NASDAQ, we can see the market respected this trend line for 2 days, pulled back yesterday, but this morning they've decided, you know what, get bulled up. And I'm not too sure why they want to be bulled up going into a weekend, because I'm not finding much for news here today at all. All right, technically, even more overbought than the S&P 500. That's understandable. This has been a relatively stronger market. For the moment, it still hasn't taken this high out, but it's so high, it's so close to it. And with the top ideally due next week for both of these indexes, I'm a little concerned. The level 1 top did not occur here. We should label it level 3 and put a level 1 top in next week. Okay, so let's give them a chance. Watch this 5-day average. And by the way, if it takes out yesterday's low on a closing basis, and that low is 9866.50, I will assume the level 3 top is in place. Now, if that occurs today, we'll get a snap back up next week, but I would be concerned of that pattern of where the level 3 did not call the true top. Okay, in other words, next week's high can be lower than this week's high. So that's something to watch for a bearish sign. Otherwise, you just have to assume the trend is probably up into next week. Let's zoom out to the weekly chart. Go to the S&P 500. You've seen this a million times. Level 1 trend could still be up, and it could be bullish all the way into the first week of July. I don't think so. I think it tops out this month if it has not already topped out. And I think maybe the S&P 500 has topped out ahead of the NASDAQ, so I wouldn't rule out a record high in the NASDAQ next week, even though I just said we could have a failed high, a truncated top, double top. But I think the S&P 500 stands a chance of not suddenly panicking here to catch up. Ultimately, I got to stay with the forecast of lower next month, and it might only be slightly lower, and it could be considerably lower. And look at this weekly stochastic indicator. It's still staying bearish, even though we've had an up week, okay? And so if it can't go much higher, now next week, I suppose, well, if it closed higher next week, it probably would flip that indicator around and back to buy. But it is overbought, and this is an intermediate, not short-term indicator, so that's kind of telling us there's probably a degree of overvaluation here, and it supports this model outlook for lower prices. All right, let's see what I've got here on the NASDAQ. Okay, here's your trend line, level 1 bottom in March. So level 1 traders apparently still buying. I mean, they might have given up last week, and we're just getting a bunch of kids here pushing this higher. But ultimately, because it is so close, I'm assuming it's probably going to be a record high next week. But the model's going to say, okay, we had strike 1 then. Let's go for strike 2, throw some more darts, call level 1 top next week, and then let's get going with that decline in July. Okay, moving back above this supporting trend line, so that's kind of bullish. Stochastic indicator overbought, but trying to turn back to a buy signal. So it's also giving inharmonious action, which is a setup for potential negative divergence. You can look that up online. All of that just increases the odds for a top, a more quality top, a more important top. We won't know for sure if we really got a level 1 downtrend until it takes out this week's low at 9368.25. So if you just want to go against my whole idea and think this market's going up forever for now, don't blame you. There's some bulls who missed out of this entire rally, and as of this week and last week, turned bullish. Can you believe that? That's how far they were behind. So I suppose this could be fresh new money, and this thing just giddy ups and goes, okay? But I'm a little concerned what's going to happen is guys like me are selling into those guys that are now turning bearish. Or bullish. I think they're standing a second chance or even a third chance of being wrong here before they finally get on track. I think we got to set back into a level 1 low. Then we can start talking of whether this can go higher later this year. And on a longer term basis, yes, I think we're in a bull market. But no, I don't think this has to be a bull market that just marches up for the next 10 years and never looks back. I'm still concerned of a trading range affair here for many, many months. Maybe some minor record highs built inside it. Maybe the range has somewhat of an upward bias. But I think you as a long-term investor and me are vulnerable to 10% declines as just normal corrections. Okay? So that's how I feel about it. And the reason is I don't think the rest of the world is on track yet. I don't think many markets around the world just have not placed long-term bottoms. All right, so that's what I've got. I don't have anything for fresh upside objectives. I think everybody's just throwing darts. I don't have that much faith in the technical projections here of where's the next top. I'm sure somebody will later say they called it, but my guess is if you kept track of them, they had many wrong calls. Okay, so at any rate, yeah, the trend is up, and that's all there is to it. But this market is overbought, it's overvalued, it's time for a setback. And I suppose it's better to now switch to passive trend following and saying, okay, we had a shot at calling this. We're not seeing a heavy-duty selling like we thought. Maybe you're better off waiting for it to wipe out support. Well, unfortunately, you're going to have to wait for it to wipe out this week's low to give you that kind of evidence. And if you don't like that, that's too late. Then you have to become even more timer, become even more aggressive, look even more short-term. With that, you always will take on the risk of being early. You just have to learn to deal with it. Or you got to go the other way and be very conservative and wait, missing out a lot to prove some evidence something's working. Now, maybe you'll also see some shocking news that'll help you along the way, but I wouldn't bet on it this time around. But I do think there's some potential negative news out there, but I'm thinking the market might be down quite a bit before we see it. All right, that's all I've got for this week. Have a great weekend. Stay safe, stay healthy, manage your risk relative analysis of others. Yes, the trend is up. I'm still looking for a top. I say it'll be down in July. Thank you.